The markets may be testing all-time highs, but our first guest sees no reason to change her defensive strategy. Diana Avigdor is a portfolio manager and head of trading at Barometer Capital Management. Good to have you with us again.
Thanks very much for having me.
Good news is good news, you're telling clients, but so is bad news.
Good news is good news and bad news is good news, because guess what? We have the central banks behind us, backstopping us no matter what. We have a really slow economy. Growth is low. So if economic data is better and growth is a little better, yay, that's great. If not, then we have central banks behind us continuing to print money. We've already heard from Mr. Bernanke that he can increase or decrease, or that he will increase or decrease, depending on what the economic data is showing. And that's just giving an open door to either way.
We're already, though, addicted to the stimulus efforts out of the Fed as it stands. Do we really want to see them continue to do that?
You know what? They're not going to throw away 2 or 3 years of doing this and let it go to waste. This has to work. The market doesn't think that they're going to go away anytime soon. You know, and actually, the market has been going up until now on a skepticism. Why? And a lot more people are realizing now that what's been driving the market is actually this central bank liquidity. You know, people were looking for economic data and earnings growth and what's going to happen to top line and margins. But really, regardless of which side of valuation market you're looking at, this has been the market that's been fueled by liquidity.
But how is it possible that we could see profits climb as high as they have, revenue remain as flat as it is, when we've got dirt cheap money like that? You start taking that stimulus away, how could you possibly expect top line growth to rear its pretty head?
People don't think that the stimulus is going to be taken away anytime soon. This is why it stays where it is. And cost cutting is at its max. Margins are high. You know, slow growth, and this is why the large cap, the multinational, the large cap, the stable, the simplicity in the business, the companies with simplicity in their business models are the ones that are working. The major story stocks, the traditional beta, the smaller caps have not really worked because it hasn't been a story type of market. It has been, one trader called it on Friday, the zombie walk.
Yes.
Just going forward.
All right. Well, as we look for brains, tell me about where we find beta. Instead of brains, we're looking for beta here. Small cap stocks, I can imagine, would have that. Is that an appropriate place for us to start nibbling away at?
Well, so you see, I jotted down a couple of things as you were going through what's top 5 in each market and what's down. And what I noticed is that there hasn't been a particular theme. You've had Google and Exxon, technology and oil. You've had financial and oil in Canada. So there is a bit of a tug of war right now going on as people are discussing second quarter. What's worked in the first quarter has been defensives. And in the last couple of weeks, we've seen a bit of an attempt at rotation into cyclicals. So from our perspective at Barometer, we want to see it play out first before you invest in that. We think you stay where it works for now. You don't have to make the maximum amount of money ever. You just have to make sure that you manage your risk reward accordingly. You have a yield, you have a predictable business model and good cash flow, and that's where you want to be. Outside
of the tepid trade that we are seeing today, are you seeing evidence of the great rotation out of bonds and into stocks, or is this just people with cash sitting on the sidelines deciding to get back into the
You know, it's interesting. Today we've actually seen the latest mutual fund flow data actually in the U.S. We've had 16 consecutive weeks of equity inflows. We've also continued to see bond inflows, and the money has been the inflows have been financed from money market. So the great rotation has happened, perhaps to a certain extent, but not from the bond market, but rather from money market.
Diana, as always, good to have you with us. Thank you.
Thank you very much for having me.
Diana Avigdor is portfolio manager and head of trading at Barometer Capital Management.